Hey Jeff, thanks for joining me.
Hey, Steve. Thanks for having me again.
Good to have you. We got some news in residential real estate. We're seeing the biggest price drop in about 18 months as high rates have dampened buyer demand. So this seems to be coming more from a place of reduced interest with high interest rates impacting. Redfin showed that across the United States, 6.4% of home sellers have cut their asking price. That's the highest percentage since November 2022. Medium asking price dropped roughly $3,000 to 4,016,623 in that last week of the reporting. First decline in 6 months. Uh, we're still seeing let me see now. Pending medium home sales price is up 4.3% year over year. So not a decline for the year, but we are seeing one of our first bumps down for the month. Your thought on what we're seeing
There's
in
a lot
residential?
packed up in this, but I think I'll start with you don't get clicks unless you're talking about doom and gloom. So this is one of those clickbaits, in my opinion. I think if you actually go through and look at the market, I saw and I was reading something from Moody's that Moody's is reporting on the market that prices are still increasing. They may have dropped a little bit, but that's because you've got stale inventory. You've got people that probably have priced too high. And they're still thinking that we're somewhere in that late 2020, 2021 market where you could just list the price of whatever the hell you wanted, and somebody was going to be coming from New York or New Jersey to buy it. And that's just not the same thing. I think what's really happening is, another article I saw was talking about values, and it was from Realtor.com, and it basically states that the home value prices, even with some of the reductions, is still up somewhere close to, I think it was like 12 or 13%. So, I think if you add to the fact that people are listing properties too high, you've got budgets that are kind of shrinking, and those properties that were already priced too high are going to have to come down for people to want to get engaged and want to buy them. That's what's happening. And I think the other side of this is both of those, Moody's and Realtor, were projecting that the values were going to continue to go up, not decrease. So, and the last point to that is the newer inventory that's coming online is actually selling at higher prices than what was, some of that stuff that's just been sitting there for a long time. So, I think there's a lot packed up in this, and I think again, this is like a clickbait article, that they want people to come in and they want to sell advertising. This isn't really about giving real facts.
Yeah, I mean, for sure, the editor comes in and puts a clickbait title on it. I mean, and then you go into the data and it doesn't match quite what the
Yeah.
title seemed to indicate. But yeah, for sure, some interesting stuff in the data. It seems to indicate that we really are kind of hitting a ceiling in terms of how high the prices have gotten and how low the affordability has gotten. And at these price levels, there's just not a ton of demand despite a housing shortage. That's my big takeaway is that the unaffordability issue is kicking in. We either need to see prices come down or financing costs come down vis-a-vis lower mortgage rates.
I mean,
Um,
interesting, like to the point, like you saw, you're still somewhere up between that 10 and 13% mark. If you look at the article, they're saying, well, they dropped down from $3,000. So from 400 and almost essentially $420,000 to $415,000. Um, but if they had increased 10 to 13%, up to that point already, then you're really talking about a house that was $41,000 cheaper the year before is now $40,000 more expensive. That's a steep increase. I don't know that I agree. I mean, prices are still projected to increase. And I think in reality, some of that inventory that's there, is just gotten stale. So they've got to reduce prices so that they get people who are interested.
yeah, that's my takeaway too, that the market's being pretty efficient at extracting the highest price it can. When you're only seeing 6.4%, I mean, that's like the highest number
Yeah.
in 18 months, but it's still only 6.4%. That, to your point, really does most likely reflect some stale inventory that got overpriced by overly aggressive sellers. This seems to be a pretty efficient market, and it's a pretty efficient market that's resulting in low transaction volume, not a lot of sales, and very high prices. And, it's hard to see, you know, that changing without like maybe a change in the economy. We go into recession or something, a change in mortgage rates and change in interest, which could be coupled. Uh, but right now it kind of seems to be, despite the headline, the same market we've been seeing, one of low affordability, partly predicated on higher prices and partly predicated on much higher financing costs than we used to
That's
have.
right. You know, and I'd add to it as well, that the article indicates 6.4% of homes that were for sale. If you actually look at the median asking price reduction at 3,000, going to 416,000, that's not even a 1% reduction in asking price. So that's I mean, we're talking about a number that is almost irrelevant for most people, even people on the at the median average income. 1% does almost nothing to a payment.
Okay, thanks, Jeff. Appreciate the insights. If you enjoyed the video, give us a thumbs up, click subscribe, and visit our website, selectfincap.com. Contact us to receive exclusive investment, commercial real estate investment opportunities. Thanks a lot.
Thanks, Steve.